Hello, welcome to the macro of it for the week beginning the 14th of August 2017. Well, again, it's probably about geopolitical tensions rather than actually pointing out macros that are actually happening this week. There are a few pieces of economic data that I'll highlight, but clearly at the moment it is the tension coming out between Washington and Pyongyang. I know I spoke about this on Friday, but I think you really do need to have that as probably your front and center, because this week is also the busiest week on the micro front with earnings season really ramping up here. So I'll point out a few things that you probably need to have on your economic radar and then discuss the rest. Thursday is the employment data, and that is the next part and the next sort of almost piece in the puzzle at the moment around how you judge what's going on in the Australian economy. Everybody knows about wage growth and the fact that it's very anemic. Everybody also knows about the fact that realistically things in the business space are pretty rosy. Have a look at business conditions that happened last week. They hit levels that we haven't seen for 5 years. So push-pull factors. Always look through the headline change because it is very erratic. It's a survey. It's not actually sort of pulling out like the non-farm payrolls do, actual registration of your tax file number. It's a survey of whether or not you found or lost employment. But look at the 12-month blended numbers. Look at the unemployment rate, look at the participation, and look at the blended numbers on employment change. And it's likely to show you that things are still going pretty nicely, but again, wages aren't there. You also probably need to look at some of the US data. There's GDP numbers coming out. You've also got inflation. You've got retail sales coming out in the US, and over in Europe, GDP as well, and some inflation data with them. That's the economic stuff, but I probably need to move back to what really will move around. On Friday, we saw Philip Lowe talking and testifying to the Congress. It was quite interesting in the fact that he is clearly on the path of trying to normalise monetary policy. And he said that the more likely than not scenario will be that rates go up rather than go down. Now, he wasn't saying it's going to happen tomorrow or next month or even Melbourne cut, which is where some forecasts are for a possible rate rise. But what it is saying is that he would rather things go higher than lower, because the scenario of further monetary easing just doesn't sort of back up what needs to happen in this country. It's another big flaw in the Aussie price. And as I said to you many times, I think the Aussie at the end of the year is more likely to be at the upper end of 70 cents, probably more likely in 80 cents rather than at the lower end. It therefore means that that sort of cyclical nature we've had in the commodity space and the commodity stocks just get a bit of a headwind on the fact that everything's denoted in US dollars and they had that problem. But again, this week we'll be focused on those geopolitical tensions. If you continue to see more rhetoric coming out of Trump, if you can continue to see an inability for Washington to sort of moderate that story, there will be a big rush to safe haven assets. We've already seen it last week. Have a look at gold, have a look at dollar yen, have a look at the Swiss franc. From an Asian perspective, and you do need to look at it from an Asian perspective, the dollar yen inverse correlation with the Nikkei is how you'll probably see us trading. So if the yen goes up, the Nikkei will go down, most of Asia will follow suit, including the ASX. And I think that was probably a gauge of how you look at it. Gold is also your other indicator, particularly looking at in Aussie terms. It went through 1600 Aussie an ounce, and on the way it's moving and the way that the pressure is there, it could even go towards 1650, even 1700 very, very quickly if you see more and more rhetoric talk. Don't expect it to go further than that, but it could become quite a rhetoric movement across the Pacific. So unfortunately, the macro view at the moment, the macro thematics are geopolitical tensions rather than anything else. And it needs to be on your radar, and just be aware that it will create volatility and therefore will put, unfortunately, a little bit of risk into your portfolio.
Did you know that your membership gives you access to InvestSMART, Intelligent Investor and Eureka Report? Just use your original login details on all 3 sites or go straight to investsmart.com.au, where you'll find all of our content no matter where it's published first.